Good evening, everyone, and welcome to tonight's Strategy of the Week presentation for Friday, September 13th, 2013. Once again, my name is Jerry D'Ambrosio, Senior Instructor at VectorVest, and tonight's strategy presentation is titled Persistent Price and Growth Stocks. Here at VectorVest, we advocate you buy rising stocks in rising industry groups and in rising markets. It's one of our core beliefs, and we truly feel if you focus on all three of those beliefs, it will greatly increase your odds of being successful. Tonight, I will introduce a new stock selection search and methodology which Todd Schaefer and I developed that encompasses those beliefs. Let's get started. I'll move us from the home page to the Unisearch tool, and the first thing I'm going to do is talk about the parameters of this new search. The new search will be located in the Searches, Special Searches folder, and the name of that search is Persistent Price and Growth Stocks. So let's take a look at the parameters. First, we're looking for a stock's price to be greater than $5 with an average volume greater than 100,000 shares. And since we want you to be buying rising stocks in rising industry groups, we're not going to look at the entire database of 8,000 stocks. We're only going to focus on the top 5 industry groups ranked by relative timing. So at any given point in time, we are looking at the hottest industry groups and the stocks within those groups. We're going to eliminate any contra ETFs, so this parameter here says stock industry group not equal to ETF short. And we also wanted the stock's comfort index to be greater than 1. So we wanted to limit the basket of stocks only by the top 5 industry groups ranked by RT, and we wanted to make sure those stocks exhibit price growth persistence. CI is a great indicator that measures a stock's ability to resist long or lengthy downturns. Over time, they have shown the ability to be very resilient to market downturns. So we wanted to make sure that the CIs were all above 1 and favorable. So here are the parameters, but really the key to any search is the sort. We're looking at a sort of CI times GRT, earnings growth rate. So we're looking for the stocks with the best combination of price growth persistence and earnings growth rate. So this search here essentially covers our first two beliefs, to buy rising stocks in rising industry groups. And if I just go ahead and run that search as of right now, we're looking at today's date, 9/13 at 3:04 p.m. Eastern Time. I'll close our search directory, give us a little bit more real estate, scroll over to the right. We'll notice that all the stocks here are in uptrends. I know it's not necessarily a requirement of this search, but we are currently in a rising market. All of the stock CI ratings are greater than 1. Most of these stocks have buy recommendations. If I scroll over to the right, you can see the GRT, earnings growth rate indicators, are very favorable. And if I scroll all the way over to the right, you can see the CIs are well above 1. If I scroll back over to the left, so this is the stock selection search that Todd and I developed, and we then tested it and used it against, frankly, the best timing model that we have, and that's the RT Kicker Combo timing system. So let me move from here into a market timing graph and talk about the methodology we're going to employ here using this stock selection search. I'll click on Graphs. I'm going to uncheck the MTI, the buy to sell ratio, and the RT, and I'm going to go ahead and put the RT Kicker Combo timing signals on this graph. So we knew we had an effective search with the parameters that we laid out there, only looking at the top 5 industries ranked by RT and looking for the stocks that have the best combination of CI and GRT and bringing those stocks to the top of the list. So then we tested it against this signal. We wanted to make sure that we were only buying those stocks in rising markets. So you'll see a number of green arrows here which indicate an up situation, and these are all points in time that we were able to buy stocks from that search. However, because those stocks have high CI ratings, again, they're very resilient to these market pullbacks, these market downturns. Instead of closing all of those positions on a downturn, we were simply going to take no action. We, of course, weren't going to buy any stocks during these downturns, but we weren't going to close out of our long positions and go to cash. We wanted our stops to take us out and then not replace positions during any neutral or down situations. So it is a form of buy and hold, but remember, we're only buying stocks during market upturns and while the market is rising. We'll never buy stocks during these downturns when you see red arrows or red lights that are confirmed by the RT Kicker signal. So exploring this methodology a little further, we realized, well, if we're going to hold on to stocks during market downturns, it made sense to us to only use this methodology in bull market scenarios. And bull markets are defined in VectorVest by rising earnings. And some of the characteristics of bull markets are we have longer upturns and shorter downturns. Therefore, if we were employing this methodology, we really wanted to make sure that we were doing so in a bull market. So let me move us from a market timing graph to a market climate graph and go out about 5 years. In VectorVest, a bull market scenario only occurs when our valuation of S&P earnings goes from below 1 to above 1. We can never have a bull market scenario when this indicator is below 1. And that situation changed from a bear market scenario to a bull market scenario on January 29th of 2010, the very beginning of this current bull market. So we wanted to start our research right around this time. But if I go back into a market timing graph, here's January 29th of 2010. We were in the midst of a downturn, a pretty significant and sharp downturn. We didn't get our first up situation or our first bullish signal with the RT combo timing signal until February 24th. So here is where we started our research, the very first up situation in this bull market that we're currently in. And how do you know when we signal the change in a bull or a bear market scenario? If I come up, click on views. Now this is January 22nd of 2010, a week before our valuation of S&P earnings crossed from below 1 to above 1. And if I scroll down here in the second paragraph, it says, we currently have a case 5 bear market scenario in which earnings are falling. If I go forward one more week to Friday the 29th and scroll us down to that second paragraph, it says we currently have a case 4 bull market scenario in which earnings, inflation, and interest rates are rising. So there's that change from a bear market to a bull market scenario. So this is where we really wanted to start our research. We didn't want to conduct this methodology in a bear market where downturns were longer and upturns are shorter. So now that you have an understanding of the stock selection search that we're going to use and the characteristics of that search, we're looking for rising stocks in rising industry groups. You now know the market timing signal we're going to use, which is the RT kicker combo, and the methodology that we're going to implement. So let me move us finally into the backtester to show you the research that Todd and I came up with. I'll come up here, click on backtester. Here is the search, persistent price and growth stocks. Here's the timing signal that we used. The start date was the first up situation in the bull market that we're currently in, February 24th of 2010. Brought it all the way to current. We had 42.28% winners, 130.81% gain. That's a 37% annualized rate of return and only a 9% drawdown, and a pretty smooth equity curve here. Each and every year, this methodology made money. And you might look at that 42% winners and say, how did we make so much? How did we make 37% with only 42% winners? Well, let me come up to the top, click on Edit, and talk about some of the settings that we have here. Again, we're using the RT Kicker Combo. Now, this feature in the backtester is only available if you have the Auto Tester plugin module. We've provided a link for you to click on in the VectorVest views tonight to order a free 2-week trial to the Auto Tester and then to receive it at a discounted price after that 2-week free trial. And if you're someone that is really interested in developing a systematic trading plan, this is the tool that you need to have. For the automation rules for the up situation, we're buying stocks from that new search, persistent price and growth stocks, and we're using a 15% gain or a 5% loss to exit positions. So you look at that 42% winning percentage, and on the surface, it's not that great, but if you let your winners run and you cut your losers early, you can have more losing trades than winning trades and get the results that I just shown you. We're looking at a 3-to-1 profit target to stop loss ratio. So we're letting our winners run and we're cutting our losers early. If I go to more settings, we're trying to maintain 5 positions and we're going to automatically replace closed positions. We'll open all 5 immediately. We don't want to close any open position every time we get an up situation. So we're going to make sure this radio box is checked. I'll scroll down to the bottom. We're going to invest the average portfolio value, buy odd lots. We don't want to repurchase a stock that we currently own. Now down at the bottom here, because we're only looking at 5 industry groups at any given point in time, we want to limit the maximum stocks per industry to 2. And that really helps us avoid buying all 5 stocks in the same industry group. Sure, that industry group may be rising at the time and may be a high flyer, but once the party is over and that industry group falls out of favor, we're not overly weighted and fully invested in that one industry group. So we just want to limit the maximum stocks to 2 per industry. And we're going to change this at the bottom and make sure we're only buying a maximum of 2% of the stock's average volume. If I go to next, we're going to take no action during the down situation. So we're going to leave existing positions open until their stop criteria is met, but we're not going to open any new positions, and that goes the same for the neutral situation. So the only time we're closing out of our positions here is if they meet their stop criteria. The test period was February 24th, 2010 to current. So there are the settings for the back test. We've also provided a PDF file of those settings so that you can recreate this yourself at home, or you have a laid out trading plan that you can follow going forward. If I come up to the top, click on Reports, go to the Situational Summary Report. Again, the overall gain was 130%, that's 37% a year. VectorVest Composite during that same time period had an average annualized rate of return of 12%. You had 42% winning trades, a max drawdown of 9, and a CalMAR ratio of almost 3. I talked about CalMAR ratio a few weeks ago and how anytime it's above 1, it's favorable. We're almost at 3 now, so that is outstanding. I'll close out a situational summary report. So the key to this search is not only us looking at the top 5 industry groups ranked by RT, but it's also the comfort index parameter in that search. And the reason why I say that, I'm going to scroll this down a little bit. The search initially did not have the CI parameter above 1. This is what that backtest looks like with the CI eliminated from that search. Results were still good, just under 40% winners, but this had a 93% gain, a 26% annualized rate of return with the same drawdown. So simply adding comfort index greater than 1, we improved our performance by 37% or 10% a year without affecting the maximum drawdown at all. I want you to take a look at a few points in time here during this research, during this backtest. We'll take a look at the run without the CI indicator. This point in time from March of 2012 to right about August of 2012, you can see that this portfolio drew down a little bit. Keep an eye on this point in time when I click on the backtest with the CI indicator. It actually made money. Those stocks that had a comfort index greater than 1 are much more resilient to market downturns. And during this time, there was a market downturn. I'll go back to the market timing graph, take us back to 1 year, pull this out a little bit, take a look at March, April, and May of 2012, right around here. So the market pulled back considerably. We had a number of red lights appearing in the price column of the color guard right around May and June of 2012. But we held our own here solely because of the sort and the parameters of that search. We're looking for CIs greater than 1, and the sort brings to the top the stocks with the best combination of CI and growth rate. Good solid companies that exhibit price growth persistence. Going back to the back test without the CI indicator, look at some of these sawtooth sharp pullbacks that we had here back in January of 2013. I'll go back to the back test with the CI indicator, and we can see those areas smoothed out considerably. And sometimes adding one parameter can make all the difference in the world. So to close, I just want to reiterate one key point. This is technically a buy and hold methodology where you always let your stops take you out. You're not exiting positions at an RT combo down signal. So this really should be something to use, again, in a bull market scenario. If we get into an extended downturn and when we signal the change from a bull market scenario to a bear market scenario, holding on to bullish positions during those extended downturns might be quite painful. And P.S. We're going to be holding a live Q&A webcast on Monday at 2 p.m. Eastern Time to discuss this strategy of the week further. And to register for that webcast, just simply go to www.vectorvest.com/events. This concludes tonight's Strategy of the Week presentation. Have a great weekend, everyone.